Time to settle the score. Let's bring in Lori Calvasina, head of U.S. equity strategy at RBC. Lori, you've been listening to all of us discuss these charts. Which chart do you think is the most important in the market right now? And you can go off the board and pick your own chart that we haven't mentioned.
All right. Well, look, I'll take option A and option B. I'm going to agree with Guy. I like the IWM chart. I think this breakout that we've seen in small cap is unbelievably exciting. All year, small caps have had a lid basically placed on top, even though we've been in the middle of this unbelievably hot economy and inflationary backdrop in which they should have been doing much, much better. And I'll tell you, Melissa, all of our inbound call volume over the last couple weeks has been on small cap and whether or not this breakout can continue, which tells me that equity investors are looking for untapped opportunities in this market. Everyone's nervous about the Fed. Everyone's nervous about inflation and supply chains, but there is still bullishness. There is still cash to put to work. Investors want to know where those undervalued opportunities are. Small caps look dirt cheap relative to large caps. They historically and very consistently outperform when inflation expectations are rising. We're seeing that again. And everything we've heard from companies in this earnings season has been that underlying appetite, even if demand has seen some technical hiccups, that underlying appetite is strong. So there's really no growth scare on the horizon. And small caps are the way to express the desire to keep investing in equities going and forward. So I think that's clearly the most important thing we're seeing right now on that board.
Lori, so first of all, bravo, Guy. Apparently the most important chart. Good for you, Guy. Not surprised. So is that affirmation by small caps, does that change? You've been on our show recently and you've been right about looking at a lot of the cyclicality in the market. I know you've been bullish on banks. I know you've been bullish on some of the industrials. Does this breakout by small caps change any of that? Do you now emphasize it? Do you lean on the gas? Tell me what Guy's chart means for your call.
So I think that I actually agree with some of the comments you guys have all made about 10-year yields and just the confusion that we've seen in the market and why rates aren't breaking out more. And I think what's really impressive about small caps is that they are managing to have this breakout. Small caps are managing to look at the bigger picture on the stronger economic and inflationary data and move forward. So I actually, sort of look at different positioning trades in the market. We can play growth versus value. We can play cyclical versus secular. We can play small versus large. I actually have more conviction in the small versus large trade right now than value versus growth, because I do think value ends up being a lot about the financials, and financials do require rates to move up. We need that 10-year yield to move higher. And even though I think the 10-year yield is probably not moving up, not for particularly good reasons, technically for that value trade to get going, you need the financials to get going, and you just need that directional move in rates to cooperate, and it's not. And I think investors are being shrewd here, and they're kind of pushing that off to the side, and they're saying, we know the economy is hot, we know inflationary pressures are building again, so we'll play it in small caps, keep an eye on what's going on in yields and not overly react to that. But I do think it's part of a mosaic, but I think you can have higher conviction in the small caps right now because they are behaving a bit more rationally.
Hey, it's BK. So I'm curious on the small cap call and how it relates to inflation in the past. But what if we have an inflation situation here where demand's fine, but you just can't get the product? Doesn't that cap the revenue potential for small caps because they can't get the product? So therefore, no matter how much they want to sell, it doesn't matter?
I think it does for certain companies, and I think that we saw that, even if we looked at big cap earnings in this last reporting season. But I think the market is being very, very shrewd here, and those who can execute are being rewarded. Those who are enduring some of those hiccups, who haven't been able to manage their inventories and supply chains as well, they're getting punished, but the broader market is not getting dragged down. And look, I'll tell you with small caps, I think when you talk to an individual portfolio manager in small cap, they do get caught up in earnings reports. They do get caught up in which company has been executing. It impacts their stock selection. It impacts their performance. But when you think about the investors who trade in small caps as an asset class, the bigger asset allocation funds, for example, hedge funds who are making bets on the IWM, you never really hear them talking about those kinds of company-specific issues. They're making big macro trades. They're making big macro bets. And so they're going to be focusing on things like, do I want to be involved in U.S. versus non-U.S.? They're going to be making cyclical trades. So I hear you, but I think that these bigger picture investors, when they're looking at small caps and moving in and out, they're just not getting that granular, to be honest.
Lori, always good to hear from you. Thank you so much.
Thanks for having me.
Lori Calvasina, RBC. If one is to believe what the small cap chart seems to be telegraphing, should you be concerned that the Fed is in fact going to play catch up and play catch up very hard. Dan.
Listen, I don't think we should be concerned with anything with the Fed. I think the market has sniffed out the right stuff this year here, and I do think, I agree with Guy. I think that's a great looking chart. I'd much rather buy that than the piling in, the straight parabolic move that we've seen in large caps, especially if you think growth is not going to collapse at some point after we have some form of pick back up or whatever you want to call in Q1 and Q1. So I think that is a much more sustainable trade, defensible trade than some of the high valuations we're starting to see in large caps. And so I'm not particularly worried that the Fed is going to change their tune so immediately and get a whole heck of a lot more hawkish. If anything, it's going to be supportive of equities for a while.